Casper files to go public, shows you can lose money selling mattresses. E-commerce phenomenon D2C bright light. Casper has filed to go public. The New York-based company that raised nearly $340 million while private, according to Crunchbase data, expects to trade on the New York Stock Exchange under the ticker symbol CSPR. Its S-1 filing includes a $100 million placeholder figure for its possible capital raise. The company will need the money, as it loses money and burns cash. Let's explore just how a mattress company does that. Growth, loss. In the full years of 2017 and 2018, Casper recorded revenue of $250.9 million, net of $45.7 million in refunds, returns, and discounts, and $357.9 million, net of $80.7 million in refunds, returns, and discounts. That worked out to growth of 42.6% in the year. Over the same two periods, Casper lost $73.4 million and $92.1 million on a net basis, respectively. Layoffs at Lime and Getaround herald rise of profit-hungry unicorns. In the first 3 quarters of 2019 versus 2018, Casper put up $312.3 million in top line, net of $80.1 million in refunds, returns, and discounts, up just over 20% from its year-ago 3-quarter tally of $259.7 million in revenue, net of $57.7 million in refunds, returns, and discounts. The company's net loss during the 3-quarter period rose from $64.2 million in 2018 to $67.4 million in 2019. The company's net losses are generally rising, though slowly so far in 2019, while its growth decelerates. In contrast, and to the company's favor, its operating cash burn is slowing. From $84.0 million in 2017 to $72.3 million in calendar 2018, Casper slowed its operating cash consumption further in 2019, to just $29.7 million in the first 3 quarters of the year, compared to $44.9 million over the same period of the preceding year. But the company's slowing growth and stiff losses using regular accounting methods, GAAP, could strain its valuation. Casper was valued at $1.1 billion in its most recent funding round. While the company's gross margins aren't bad for a non-software company, 49.6% in the first 9 months of 2019, the firm spent over 73% of its gross profit last year on sales and marketing costs. That figure indicates that Casper spent heavily to generate growth that came in at about 20% so far in 2019, as reported. That fact implies that growth will remain constrained, as the firm can't afford to spend too much more on the line item. Which begs the question, what's the value of a firm that is showing slowing growth, non-recurring revenue and sticky GAAP losses? The company's adjusted losses aren't much better. Looking at its adjusted EBITDA, a profit metric so distorted to flatter that it's nigh a funhouse mirror, Casper only marginally improved on its 2018 tally. Looking at the first 3 quarters of that year, minus $57.50. For more on this story, visit the news article link.